Ladies and gentlemen, you are listening to Life Well Lived by Omobola Stephen. It's an engaging and enlightening talk show on life, relationships, and the business of life. Grab a cup of juice and just chill. Life Well Lived by Omobola Stephen. Live life. Live fully.
You are now tuned in to this week's episode of our podcast. Today, we are going to interview some of the greatest and most influential minds in our field. By sharing our collective expertise, we will show you how to harness, control, and use your own skill set to achieve ultimate success and live the life you want. And now, please welcome your host.
Hello, this is Unrivaled by Omobola Stephen. I'm your host, Omobola Stephen. Now, the focus on Unrivaled by Omobola Stephen is for us to begin to have a transformed mind shift for our individual lives, because we've come to realize that we remain stuck in life because we are not embracing the changes that our life needed. And not to begin to look inwards and search for the right answers, we may remain stuck in life. Now, the focus of Unrivaled by Omobola Stephen is for us to move from where we have to where we need to be, providing disruptive mindset conversations from experts and professionals who are added in this topic. Today, I have Zach Oelman, who is a financial consultant. Also, he focuses on real estate and finance. He will be talking more about finance. He also talks about taxes, and he will be talking about startups and also selling of business. Welcome to the show, Zach Oelman.
Thanks for having me. I'm excited for today's conversation.
Excited about our conversation today, Zach. I'd like us to start with tax awareness investment strategies. I would like you to share with my audience any tax awareness investment strategies that we should consider.
Yeah, and so the biggest tax strategy and the easiest tax strategy, it depends on the scope of your business. It depends on how much money you make. There's all of these the tax code is very complicated. And so what I tell people is finance is natural law. Finance is literally math. It's the same in every country. Finance is, right? And so 2 + 2 = 4 wherever you're at. And so finance is just math. However, tax is somebody's opinion. And so tax changes in every country. Tax changes every day as the economies change, as people in power change. And so you have to understand first that there's a difference between tax and finance. And so talking about tax, it's obviously going to depend on where you're at. I'm not versed outside of the United States, so I'm going to be talking specifically about taxes inside of the United States, but the principles are going to be the same. And so taxes, there's an imposed tax that decreases your net income. And so the framework is going to be the same. And so in the United States, one of the, you have tax strategies like putting your kids on payroll. That's a very easy one to take. You have tax strategies of using your computer and your cell phone and all of these things that used to be what we call personal expenses. If you're using them for the business, you get to deduct those. You get to move those over from personal to business. Now you have to obviously be using those. But one of the easiest tax strategies is buying rental real estate, cash flowing real estate. And so that's why in my intro, you hear why I help people scale businesses and then reinvest that money back into real estate for the tax benefits of the real estate. And so it's the simplest form of tax strategies you can do out there. And inside real estate, the big one is called depreciation. And so you get to depreciate that asset over different time spans, depending if you accelerate it, to offset any gain on your active income. Now, there's a bunch of different criteria that you have to qualify for in that, and it depends on each person in each scenario. But that's the big thing. You buy the rental real estate, you depreciate it, which creates a loss on your rental business, but it's a paper loss. It's not an actual cash loss. And so you get to carry that loss over against the active income of your business. And that's one of the simplest ways to get tax advantages in business and real estate.
Zach, do you think that taxes affect investment? Now, what are some of the basics that we need to know to reduce a person's bill?
Yeah, and so taxes absolutely affect investments because if you're whenever you're asking, should I do this? Should I invest in crypto? Should I invest in forex? Should I invest in stocks? Should I invest in real estate? Should I invest in a piece of land? I don't know, right? You always have to consider what is the after tax rate of return because each one of those are taxed differently. Each one of those has a different implied risk in them. And so if we're just talking about taxes, you have to go, okay, what's the after tax rate of return of doing a fix and flip? Because it's taxed different than passive income. And so absolutely, and the tax code is so complex and we can get really creative with it. And so to be able to, to say what's the right answer, I really need the details a scenario. But absolutely, if you're not looking at after tax rate of returns, you're not going to be able to compare options effectively.
So let's talk about the high income earners, both in the US and also globally generally. So how can we do tax smart investment strategies?
I would say so. There's a difference between a tax preparer and a tax consultant. A tax preparer is going to just take whatever you give them and put the numbers in the machine that tells you how much you owe in taxes. A tax consultant slash tax strategist, they're going to say, how do we get your tax bill down to as low as possible? And so you're going to want to meet with a tax strategist. Now you'll know the difference. A tax preparer versus a tax strategist, the difference is going to be how much do they charge, right? Typically in the United States, a tax preparer is going to charge anywhere from $1,000 to $5,000 just to prepare your taxes. There's almost zero consulting. It looks like, you meet with your contractor your tax professional once a year. They ask a couple questions, they fill in the blanks, and they move on. A tax strategist, you're meeting a year ahead of time. I work with my people. I have a 10-year projection model I work with. So we could do tax strategies 10 years in advance and look at it and say, okay, hey, we're moving to this segment. We need to do this. Then we're going to move to this segment of your business, and then we need to do this. And so that takes a lot more time. It takes projections. It takes a much more sophisticated conversation and a much more sophisticated person. And so therefore it's going to cost money. And so most people use tax preparers. I am a tax strategist we also prepare taxes. We have a whole team that helps with all of that in the background. And so that's going to be your best bet. And depending on if you're a W-2 employee, there's not really anything you can do. It's, your options are limited. However, if you have a side business or you have a spouse that has a business, it really opens up the doors to that strategy. And depending on where you're at in your business, it might make sense to have that tax strategist. A lot of them do free consultations. Like, I only work with people if I can save them money. If it's going to cost them, let's say it costs them 10 grand to work with me. If I can't save them more than 10 grand, I'm not going to work with them because it would be a net loss to them. Right. And so some of these tax strategists charge $20,000, $30,000, $40,000, depending on, we just did one of my colleagues, it was $33,000 to file their taxes because it was two businesses, very complicated. We had to go back in time, but we saved them dramatically more than that. Right? We saved them like $70,000 in taxes. And so it was a net benefit to them because their tax preparer didn't maximize the return. Does that make sense?
Okay. Sure. Thanks, Zach, for that brilliant explanation. I'd like us to talk about setting up businesses. In this side of the world, we come to think of setting up business. Sometimes it looks this word. And I'd like you to address the selling question. Is it good really to set up a business? And so what are some of the checklists we need to start taking?
So selling a business is about how do we transfer cash flow to the new owner with the minimal amount of risk and the minimal amount of loss. And so in order to do that, there's something called well, there's many different facets of it, but the big one is, first off, understanding your business. Are you the business? If you are the business, it's going to take longer. It's not impossible. We do it all the time, but there's something called personal goodwill. And so it looks like, in doctors, like there's a lot of doctors, accountants, the professional services, where the professional creates a relationship with the client, and they love, they love their doctor, they love their CPA, they love their law firm, whatever. And so once that relationship is no longer in place, because let's say I buy the business and I'm a doctor and you're my patient, you're going to be like, who are you? Where's my old doctor? I'm going to go with him. I don't like you. And I just lost a client, which decreased my cash flow. And so what you have to be careful of is, how do we transfer that personal goodwill between Doctor 1 and Doctor 2? And there's a way to do it. And how you do it is over time, maybe 6 months to 2 years, you both are running the business. And so both doctors would come into the session, and then Doctor 1 would introduce me as the new professional that is going to take care of you. And the idea is for me to create the relationship with you and have him slowly back away over time. And now you're my client. And so that's one thing, especially in professional services. The other thing we need to look at is systems, processes, structure, SOPs, whatever you want to call it, is, can the business run without you? And so if person A is selling the business to me, let's say you're selling the business to me. When you leave and I pay you that check and you're no longer in the conversation, can the business still operate? Do the employees know what to do? Right? Does everybody know what to do? And the better the business runs without you, the higher value you can get, the easier it is going to be to sell. And you can look at this as proof on the stock market. And so the publicly traded companies, you're buying a piece of the business. And so it's very liquid, meaning I can go in there, I can buy it today, and I can sell it 2 seconds later. And so because it runs without me. Now, in the private business sector, most people, especially at the entry level, it will not run without them. And so therefore, you're not buying a business, you're buying a job, which is still, there's many people out there that overpay and they buy a job, not a business. And so, there's and some people are okay with buying a job, right? And so they have to go in there and they have to do the activity. And the challenge is, some of them know how to remove themselves from the job to make it a bona fide business and now become a shareholder. That's my goal in all my businesses, is not to become the CEO, but become a shareholder with a CEO. Most people don't know how to do that. There's a lot of leadership skills. There's a lot of documentation. There's a lot of, you have to understand what you're doing. But that's the ultimate thing, is like, what are you selling and who's buying? Right. And I mean, I could go on for days about the different aspects of that, but I don't want to bore people.
Oh, sure. Really, can we just sell any kind of business?
You can sell anything if there's a buyer. The question is, who's the buyer? And so you have a couple different buyers. You have people that are in the same industry that are buying your assets, or I'm sorry, maybe your customer list. You have competitors that are going to buy you to put you on a business and take the customers list and shut it down. You have what we call ancillary. So let's say you have a very important patent, and that patent is very important to my business. I would buy you for your intellectual property to save money on the long run, and either keep your business or put it, do away with it. So you have to ask yourself, who is my buyer? Is there what we call a liquid market for it? And so then there's different types of sales. There's an asset sale. So let's say you own a trucking company. That is a hard asset that's worth money. You can just sell it for the asset value. Let's say you have let's say you have 10 semis at, they're worth $80,000 a piece. That's $800,000. So you would just sell the semis. Now, typically a business is worth more as a going concern, meaning if those semi-trailers, semi-trucks are making a net profit after all the expenses, Well, there's extra value there above and beyond the asset value. And so let's say it's making 100 grand a year. And so now you could sell that business for more than 800. And so, but you have to have somebody on the other end to buy it. And so let's say, that no one wants to buy the trucking company, then you sell it as an asset value as opposed to a going concern value. And so there's there's something for everyone if the price is right. The question is, are you willing to accept what the buyer is willing to pay you?
Right. Thanks, Zach. So let's talk about the startups. So why should I sell my startup? That's a critical question in the heart of my audience. And so what should I need to know before taking this step?
So I want to make sure I understand the question. Why should you sell a startup?
That's right.
I'm actually having one of my clients is in that conversation right now. She has a startup. She's thinking about selling it. And I asked her why. I said, why do you want to sell it? And she's like, well, to make money. And I said, well, how much money you're going to make versus how much money are you going to make if you keep it and remove yourself from it? And so I'm an advocate of starting businesses, removing myself from them, and having them cash flow to me as a shareholder, just like a piece of rental real estate. Put a CEO in there, put a team of people that is increasing the value of the business while I go do something else. Maybe start a new business, maybe go ride motorcycles, but that takes a very complex skill set. And not everyone has the capacity to do that. And so what they may do is they may say, I just want out of the business. I'm tired. I'm exhausted. I've poured 5 years of my life, 10 years, 20 years of my life into the startup. I want a break. And because they don't have the skill set to take it to the next level to remove themselves. And so I don't want to sell a business unless I don't like the business, unless I want to focus on something else. But it's like, for me, it's like the question is, I put all of this time, money, and energy into something. I've removed myself from it. It's kicking off $500,000 a year, and it's increasing in value, and it's increasing in cash flow. Why would I sell it for $1 million, $2 million? Now, some people, that's a personal question. For me, I'd rather have $500,000 every year going up by 5, 10, 20% every year than to take $1 to $2 million. Those are just examples, because the $2 million, it's going to be taxed, right? So we have to remember taxes after rate of return. It's going to be taxed heavily. And knowing what I know, I can get my tax burden down on the if I hold it down to zero. And so to me, it's a no-brainer. And over a 5-year span, me keeping that business is dramatically going to build my balance sheet, my assets, than it would if I would to sell it.
Zach, is it compulsory to sell a business that hasn't made any profit here? Well, let me put it this way. If a person has a startup, right, a good startup, but hasn't made any profit yet, looking at selling the startup, is it wise enough to do, or is it must that a profit should have been made before thinking of selling it?
Well, it depends on what the intrinsic value is. And so again, let's say you have a patent and you haven't made money in your business because you don't have the skill set and the resources, right? You don't have the experience, but I do. And if I see that you're not maximizing that business, it's negative cash flow, I'm going to give you an offer, and it's going to, that is less than what I can make. And so obviously if there's a negative, if a company isn't making money, it's like, well, where's the value? That's the question. Where's the value? And so value exists in products, value exists in customer goodwill, value exists in intellectual property, value exists in process, customer list, staff. So there's all of these value, but you as the buyer has to know how to extract more value than it's costing you. And so I could come in to a business that is negative, rearrange some stuff, and in 3 to 6 months, it'd be positive. Just because I have more experience, I have more resources, I have more of the I'll call it more experience, more intellectual horsepower than somebody I bought it from because they didn't know how to do it. And so in that case, I would buy it. But the thing is depending on the value, you're not going to get that much for it, right? Because it's not making positive cash flow. If it was to make positive cash flow, you would get more money for it. And there's all of these little nuances that go into this stuff. But those are the big factors that we need to consider.
Thanks so much, Zach Oelman, for the explanation and insight you've shared so far in all our conversations that we've explored here. So how can I begin to set smart goals that achieve results?
So in order to set the goals, the first question we ask our clients is, what do you want out of life? Right? Because you can buy businesses, you could take this thing for the rest of your life. But where do you want to go? And so once I understand where do you want to go, what do you want your life to look like? Like I've been traveling. I'm a digital nomad. I travel a lot. And so I've set up my businesses in my life to align with that. There's some people that they don't want to travel, and so they would have a little bit different avenue. And so the question is, where do you want to go? And once you understand what that is, then we come back and we go, okay, where am I? Just like if you were traveling, just like if you were like, say, I'm hungry and I want I love ramen. Like I love ramen. So it's like, okay, I'm going to go find a ramen store, a ramen restaurant. Where is it? Oh, it's 3 blocks that way and 2 blocks that way. Where am I? I know where I'm going. I know where I'm starting. How do I get there? Well, I can walk. I can take an Uber. I could run. I could ride my motorcycle. I'm going to choose the walk because it's a nice day and I've been working all day, right? Same thing in business. Where are you? Where do you want to go? What are your resources? Do you have money? Do you have experience? Do you have all of this stuff? We call them your currencies: time, money, knowledge, relationship, experience, and community. And so what we do is when we work with our clients is we get an understanding of the starting point and the end game, and then we understand what the resources are to make that journey. And then we create a plan around that. And that's where most people fail. Where most people fail is they don't create the plan. They don't create the destination. They do something like this. Well, I just want to make money. I just want to make money. And that only works for so far. Because once you start bringing on people, they don't see the vision. They don't know where they're going. They don't know where they're taking the business. And so it's not going to be maximized. All the efforts aren't going to be maximized into one destination. And so if you're not maximized, you're not going to be efficient and you're not going to make as much money if you don't make any money at all. And so my coaching around goals would be pick the destination and then work backwards to create a plan to get there.
Thanks once again, Zach. Any exciting news or any projects in the pipeline you'd like to share with my audience?
Oh my gosh, we have so many exciting. So we just launched a financial services firm because we've had so many challenges as well with CPAs, bookkeepers, just finance teams, because it's a dying art, believe it or not. Like a lot of these individuals that have been in it for a long time, they're retiring, and the new people, they're just not filling the jobs. And so the challenge, it's the financial service. You need it. You need tax strategy. You need bookkeeping. You need financial projections. And so we've just started that business. We have Genius in 21 Days, which is a business we have in our private equity portfolio, where we help people speed read, remember things forever, and just become more efficient with learning, which increases productivity, which increases profits. And so that's something we got going on. We also have a couple other portfolio businesses we're working on, but it's all based around this framework of finance, operations, sales, and marketing.
Great, good to know. Wish you best of luck in the projects and great work you're doing, Zach.
I love it. Well, thank you.
Okay, yes, sure. We like to have a social media handles and a website to reach you to learn more about you.
Yeah, so there's a couple places you can go. Learnandgrowrich.net. That's my business. That'll take you to our commitment to everyone is we give all of our content away for free. We're not selling content. There's people selling content out there that I have for $20,000, $30,000, $40,000. And the reason I share it is because I want everyone to prosper. I need my community to make money. And if they make money, I make money because they're gonna need my services. And so what I do is I give all my intellectual property away to help my client or to help my followers make money. And then they're going to go, Zach, I'm making money. I need your help now. Right. And so it's a way to do that. That's at learnandgrowrich.net. And then you can follow me personally at indianaoelman.com. So Indiana like the state, INDIANA Oelman, last name, OEHLMAN.com. That's my blog. That's where I'm talking about fun stuff, motorcycles, my business, just theoretical stuff that I just love writing about.
Absolutely. Once again, the audience of Library by Omobola Stephen, we'd like to appreciate your time and for sharing such profound insight and talking about we talk about investment and stock strategy and also scaling of businesses, selling of startups, and also selling of businesses. Such a great discussion we had today, Zach. I wish you best of luck in the projects that you embark upon now and in the future.
Well, thanks for having me.
Thanks once again for joining me. If you'd like to catch up with any missed episodes of the show, you can catch up on any cost promotion platforms or any distribution platforms that you bump into online. Just search for Library by Omobola Stephen, and you go. Do have a great time as you listen to expert and professionals, even thought leaders, share their thoughts and insights on disrupting mindset conversations on any topics or subjects on the personal development and self-improvement. I need you to stay safe always.
If you enjoyed today's episode, make sure you subscribe and leave us a review.